Good morning, guys and girls. I hope you are well, and welcome to this morning's video. I hope you had a great weekend. So, I have just the one pair on watch today, which is pound CAD. Just to say that I took a loss on Thursday, I believe it was. I didn't make a video on Friday, I don't believe. And I took a loss on Thursday on dollar yen. So, I just wanted to break that down because there's a few things that I wanted to touch on where that entry is concerned. So, the reason I was looking at this, so we've got a bit of time today because I've only got the two pairs to get through. But the reason I was looking at this is because initially we were I was looking for shorts because technically we'd sort of tapped into this area here. Okay, we had this, we moved down, we had the correction afterwards, moved into another correction, and then we were down here. We broken out of that, and I was looking for continuations down here to potentially take out this low and start tapping into this area, the area of more significance for that potentially for that move to the upside to complete this kind of structure. Okay, so previously we were down here, but then price gave us, so we had this massive bullish candle like that, which broke back above all of these lows. Okay, so it broke back above here by way of this massive impulsive candle. So this was kind of, I was seeing this as a kind of failed bear structure, and price was kind of showing its hand. And then I was looking for continuations up here, corrections to potentially complete this structure like that. Okay. And so after that daily close, which would have been Wednesday, yep, that was Wednesday. We were on I was on the 4 hour chart. Okay, and we could see a bit of a corrective start to the move, but then we get the impulse correction continuation. So we'd already had one correction. So that was kind of the market showing its hand that it was potentially ready for further continuation to the upside. And I was looking to get long rather within this correction here. So we could see the correction starting to form. And then what I did is I was looking at this. So this was a 1 hour structure, which is exactly what I forecasted. And I just went down to the 15-minute chart, not for the entry because it was a 1 hour structure. I could see the 1, 2, 3. Okay, I was looking on the 15-minute chart just to see the structure a little bit more, just to analyze it a little bit. And what we could see here, if we just take the trade out of its box, what we could see here is with the 1, 2, 3, 3 sharp moves. Okay, we had the middle section within here. Okay, we had the 1, 2, 3, which broke just below this sharp move. So I was seeing that as the hook point, okay, where the volume potentially was. And we tapped into that by way of a 1, 2, 3. So then I went back to the 1 hour chart to place the entry. And I placed the entry here. So a couple of pips above this candle in keeping with my forecast. And then I cropped through the wicks. So see these wicks here. I cropped through this green wick. I put my stop loss 50% of the range from here to here. Okay. And then I was literally just wicked in and then price just dropped. And one of the things what a lot of people will do, and it's already happened, whenever I place a trade, even though I have one of the lowest trade frequencies within the Falcon community, or maybe I do have the lowest trade frequency. One of the things, whenever I place a trade, people will immediately say FOMO, okay, for reasons unbeknownst to me. And sure enough, someone has already blamed my psychology on this loss. Okay, even though I scored the highest score in the entire community on 2 consecutive occasions, people still think that my losses are psychological. One thing I did notice is that not immediately afterwards. So one thing I wanted to touch on. So we do have quite a bearish profile on the 4 hour. I was aware of that. Okay, so we have this red doji candle there, but then we have the bearish high test and then another bearish high test just before me getting short. Now, in the middle of nowhere, these don't necessarily mean very much, okay? But at an area of value, okay, these are entry candles for people to get short, or exit candles rather for buyers to get out of the position, right? And one thing I noticed not immediately afterwards, and the fact that I've noticed something after the trade, I'm sure will lead more people to go, FOMO, you just wanted to get involved. Not the case at all. People who are, if I've stuck to my forecast to the letter, something which I always do, then that's not FOMO. That's me sticking to my forecast, right? Okay. And one thing I noticed, but at the weekend when I was doing my advanced self review, when I was going back through my pairs for the week, one thing I noticed, and which I didn't notice at the time, and of course, people are going to say it's psychological again, and I'll just touch on that again in a minute, is that, okay, I didn't notice that in the moment, but I also didn't notice it on the morning that I didn't for that I did that I didn't notice it the evening before when I did my forecast, and I didn't notice it in the morning when I just checked my forecast again. Okay. I also didn't notice it on Friday evening when I saw this trade again. When I went back to the charts, I only saw it actually on the Saturday afternoon when I did my advanced self review. So a lot of the time, when you don't see something in the moment, okay, but you see it immediately after the trade, that is a good indication of FOMO because you were just trying to get in and you weren't paying attention to the confluence factors. But if you haven't noticed something like this the night before and on the morning of the trade and whilst placing the trade and immediately afterwards and on the Friday evening, and you only noticed it on the Saturday afternoon when you reviewed all of your pairs, that's not FOMO, that's not psychological. It's just sometimes you're not going to you're going to miss things. Okay, you're going to miss certain details, technical details. So this was a technical error. Of course, sometimes psychological errors are made. But then the question I asked myself while I was reviewing my week in the market, I was asking myself, well, why did I not pay? Why did I overlook this? Because I don't normally overlook stuff like that. So it was a technical mistake. So I'm asking myself. So the reason that's significant, just to touch on it, is because that means, okay, so what? First of all, why is that area there significant? Okay, well, it's significant because we had all of this volume, okay, and then this exchange of liquidity here was the one that caused fruit. So there was enough of an exchange of liquidity here to cause price to smash through all of this volume without price respecting it at all. So there must have been a lot of exchange of liquidity here for price to be able to do that. Okay, and typically speaking, if we do sell off from an area of value again, we typically sell off in a similar manner to we sold off the previous time around. So look at that. What's happened? We get something similar. Okay. So why is that significant? Well, that's significant because if we just look at the profile of these 4-hour candles, that then means if this is an area of significance and we've just wicked above, okay, then potentially this is an entry candle to get short. So is this one. So you've had two entry candles for which are reasons to get short. So it's not surprised to me that this sold off. And people might say, well, this structure was a bit steep. Okay. Well, again, the steepness doesn't bother me, especially if you just flip this upside down. The gradient's fine. It's a little bit steep. Okay. But the steepness doesn't bother me. But it would have done if I'd have paid attention to that, because had I paid attention to that, then this steepness would have likely implied that this wasn't necessarily a move to push higher, and that the reason that it's steep is because it's actually just tapped into this area and we're now moving to the downside. Okay. And it's the gradient of this which gives the 4-hour candles their makeup. Okay. But again, if this wasn't here, I would have been happy to take. So when I reviewed this trade, I reviewed it as one that I wouldn't take again because of this little confluence factor there. Okay. If this wasn't there, then I still would have taken this. Okay, so then the next question I asked myself is, why did I not pay attention to this? And I think the reason is because when I was looking for shorts down here and we had the correction, okay, this was no longer relevant. Okay, so this wasn't relevant to the shorts once we'd dropped through here, because we'd broken out of all of this volume, and then anything underneath was a separate correction. Okay, so this became less relevant. So I probably took this ray line off, okay, or didn't have it on in the first place. Okay, and then when it came to the buys, once price broke back above all of this, I didn't have the ray line on, and then I just completely overlooked it. So that was a loss, one that I wouldn't take again, but one that I would have taken again if this little consolidation wasn't there. So just wanted to break that down in a bit more detail. So that is dollar yen. So let's move on to what I'm looking for today. So we're looking at pound CAD today. So I've just slightly amended my forecast based on something which I watched in the Falcon content. So on the higher time frames, if we just zoom out to the weekly, you can see that we have tapped into this area multiple times, and we don't appear to be respecting this, okay, so much this high here, because we've tapped into it multiple times and we're selling off. But there is an area of significance, an area of value on the daily chart, okay, which I'll touch on in a second. But what we can see is that in terms of this move from here to here, so if we measured this, so this high down to there, we have retraced about 85-90% of that. So it's likely, therefore, that we're gravitating back towards this high, and that this is just a bit of a corrective move up, but this is just an impulse correction continuation to push higher, to tap into this area of volume, especially when it's sharp, and we've just near missed to it, okay, in the past as well. We've near missed to it again here as well. But again, that doesn't mean that we can't capitalize on a move to the downside in the meantime. And if you just look, if we just zoom down a little bit, you can see that we've tapped into this move here. So if you really wanted to separate this, we have these two highs here. Price expands, so we get the lower lows. We wick above, wash out the orders. Price comes down, it creates a footprint. We come down, come back up, tap into that area, and then we get this very, very bearish weekly candle, which is giving me a clue that this is just an impulse correction continuation to push lower to potentially take out this low, especially given that we didn't actually retrace 50% or more of this candle. We've retraced about 30% of it, so that's given me a clue that this is just a correction for the next wave to the downside. This last weekly close, you can see we're moving up correctively. There's so we had that sharp move there. We tapped into that. We had the near miss to it, which was the clue that this was valuable. We then tap into it and move to the downside. We've already had one correction. We move to the downside, but we seem to be gravitating back towards that correction, okay? If we just zoom down to the 4 hour, there's your correction. So previously I was looking for a tap into this area, okay, and a push down and a flag, okay? So we had this kind of 1, 2, 3, the near miss to it, okay? This being the middle section, this being the structure, okay? But you can see we're not, if you look at what's happened, right? So we had this 4 hour rejection candle, but it was bullish, not overly bullish, but it was bullish. How did we respond afterwards? We tapped into that area and look at the 4 hour candles afterwards. That's not typical. So if we are going to move to the downside after a 4 hour rejection candle such as this, that's not the sort of 4 hour candle that we would see afterwards. And then we get another 2 4 hour stalls, okay? So we get an atypical 4 hour rejection after this one, and then 2 4 hour stalls. So the question I ask myself is, why is price doing that? Well, price is likely doing that because the volume that it needs to find, that it's seeking to be able to move to the downside, is up here, okay, where the start of all of this was. And don't forget that the exchange of liquidity that happened here caused price to smash through these lows impulsively, okay? So maybe that's where the volume is, okay? And the other clue that we may be gravitating back towards this area is the fact that if we just look at the weekly close, when you see, although I said this looks like an impulse correction continuation to push lower, when you see a bullish candle like this with a lot of wick below it, okay? So if there was no wick there, if this was just, just the body, I wouldn't be as inclined to think we were moving all the way up to here. But when you see a big wick beneath it like that, that doesn't normally imply necessarily after a big move down like this that we're just going to start rocketing to the upside. But what the massive wick followed by the bullish body can imply, it can imply that we're moving a little bit higher before we get that move to the downside, okay? You've got to remember what a candle like this would look like to some of the sellers, okay? Some of them will be getting out their positions, which would inflate the price a little bit higher than we otherwise might anticipate. So what does that mean for me? Well, that means for me that I'm going to be looking for one of these two entries. Okay, so I'm going to be looking for price to tap into this area of value correctively, and then I would look for a 4-hour risk entry, so a rejection on the 4-hour chart, given that this structure I can see on the 4-hour chart is therefore a 4-hour structure, or I'll be looking for 2 1-hour rejections. So I've just amended my entry criteria ever so slightly based on something that I saw in the foundation webinar that I attended on Friday, thanks to Danielle. So previously I was looking for 2 1-hour high tests, but she made it clear in that webinar that you can also look for two 1-hour rejections of any description. Okay, so if we get that, if I miss that or we don't get that for whatever reason, then I'll be looking for just a tap into the area followed by a push down and a 5-minute or a 15-minute continuation. And then depending on which one we've got, I'll be looking to get short on the break or within it. And then down to kind of the start of this, I don't think that holds a massive amount of weight, but just as a first inflection point down to there, for something in the region of 4.5. Of course, we've got this now, so we could use that as a first inflection point. But when I did this forecast, that was kind of the base of all of this that I was looking at. So 4.5% to there. Okay, let's get that off the chart a sec. And then I'd be targeting, just because it's quite a big range anyway, okay, and we've got quite a lot to work with anyway, I would be targeting that low there for about 9.5%. I would use the mechanical management tool. I would measure 90% of the range. I would set the take profit there whilst trailing my stop. And the reason being is because, as I've said, even if price is going to continue, it will often pull back from the 90% area and often pull back about 50% of the range. And if you just eyeball this, so look at the size of the stop loss, roughly speaking, that would be a pullback of about, 4 to 5%, probably in the region of 4.5% before we get that move to the downside. So I don't really sit through pullbacks of more than about 3%, and it's just about stacking those wins if you can. Will this be ready by the end of today? Who knows? We don't know what the market's going to do. Maybe it'll be ready tomorrow. Maybe it won't shape up at all. Who knows? But I've got this on watch anyway, just to see what happens. I have an alert set just below the area of value. And that's what I'm going to be looking for today, folks. I hope you've enjoyed this video and the recap and the thought process behind the recap. And I shall see you again in the next video. Thank you for watching.